Good morning, everyone. You're all very welcome to our weekly market outlook. Obviously, yesterday was Cyber Monday off the back of the UK, or sorry, should I say the US Thanksgiving holidays last week. Didn't really have too much volatility in the day until the back end in terms of the Asia session kicking in last night, where a lot of the news started to emerge regarding China and their COVID-0 policy and potentially dropping the COVID-0 policy in the midst of all the protests and I suppose semi-riots that is being seen in China at the moment in time. I suppose the big thing that we're kind of looking at here, broadly speaking, in these markets is in terms of the volatility, both to the upside and to the downside. We're very much seeing it present in both directions at this moment in time. And of course, as traders, both short-term and long-term traders, we have to be able to put a clear perspective on things as well when we're executing in financial markets. So first of all, this week, we're obviously going to be looking at the data really for the rest of the week. So it's a very data-heavy week this week and next week. The next kind of 2 to 3 weeks will be very, very heavy from a fundamental perspective. We have a lot of data out in every jurisdiction or every area. So it is important to factor that into consideration, particularly for those scalpers or those short-term traders, because of course you don't want to be entering a trade, potentially getting caught out in the news in terms of volatility, having slippage, because that's, of course, that generally happens around high-profile news and fundamental events, and then getting caught out and potentially blowing your challenge when it could be very, very easily avoided. Now, of course, I suppose as we look at our economic calendar today, just taking you through, we're going to be doing regular calls this week, obviously taking traders through day by day. Today, for example, we do have Swiss GDP figures, and we do have European data out, European consumer confidence with business climate and Dagundo speaking from the ECB. This afternoon, we do also have harmonized prices in Germany, harmonized consumer prices, and we do have obviously speakers from both the ECB again and the Bank of England in Mann and Schnabel, both on the wires. This afternoon, we do have GDP out of Canada. We do have the housing price index from the US. We do have the Schiller home price index from the US, and we do have US consumer confidence as well. So this is what we mean. Every day we're getting multiple elements of financial data, financial information. And that will very much dictate volatility from a short-term perspective as well, particularly that arbitrage element. And arbitrage is effectively price action that hasn't been fully priced into the markets, because, of course, when you see that influx of news coming out, you'll see the markets jump, let's say, 50 points or 100 points or whatever it is. And that's effectively what arbitrage is. Later this afternoon, we do have Governor Bailey speaking. And, of course, then overnight, we do have some data out in Asia with New Zealand building permits and Japanese industrial production as well. So again, quite a busy day. We've got 4 or 5 currencies there. We've got the Swiss, the Euro, the Pound, the Canadian dollar, the US dollar, the Kiwi, and the Japanese yen. So we've got kind of 5, 6 currencies there that's all affected by news and data over the next kind of 12 to 16 hours or so. Okay, tomorrow morning as well, we've got additional data as well tomorrow. Another very, very busy day. We've got Chinese data overnight. We've got Aussie data overnight. And that'll be an interesting one with China, given obviously the COVID-0 policy, given the protests, and of course, obviously what happened in the weekend over China with the apartment block going up on fire and obviously people unable to escape because they've been locked into their homes. So that's obviously kind of what's happening in China at the minute, which is hugely, hugely important, not just from an economical perspective or from a trading perspective, but from a human rights perspective as well. Now, I suppose heading towards tomorrow morning, we do have German data again. We've got Italian data. We've got European data, broadly speaking. So we've got CPI, effectively harmonized consumer prices in Europe, in the Eurozone, both from a core and a non-core perspective. We've got the Swiss ZEW survey as well. So again, tomorrow morning, London Open, European session between, let's say, 8, 7 o'clock from, let's say, when the European exchange is open to kind of 10, 10:30 will be volatile. So you're going to have that 2-3 hour period of volatility. With that as well, obviously, tomorrow we do have employment change, ADP employment change. We have GDP in the US. We've got PCE in the US. So for those of you who don't know, PCE is an inflationary outlook figure that the Fed looks to analyze when it's talking about its inflation objectives, when it's talking about its inflation target. So that would be one to watch as well, the PCE, particularly to see if it's going to continue rising. It rose last month from 3.9 to 4.2. It's looking for kind of a halt in increases. So of course, If that continues to rise, that's obviously not going to be a good thing. So then obviously tomorrow afternoon, we do have home sales. We've got multiple Fed speakers on the board. So we've got Chair Powell speaking, who generally moves markets. We've got Cook on the wires as well. And we've got the beige book at 7 o'clock. So the next couple of days is really going to be volatile in the markets. We will be doing another update video tomorrow. I suspect probably after the US data, shall we kind of actually see kind of how the markets are developing and evolving from Wednesday night into obviously Thursday as well. So the next couple of days are going to be hugely busy, and there's going to be a lot of volatility in the markets. And of course, it's important to have patience and stick to that trading plan. All right, above all else. Now, as we look at the markets just very, very quickly, we can see obviously the dollar is continuing to consolidate in this 1.10550 to 106.50 area of interest. Now, of course, on the higher time frame, it's all been about dollar weakness over the last few weeks, and of course that has been the clear telltale sign. We've had multiple bats of dollar weakness into this area of interest where we've been kind of holding or consolidating around over the last week or so. So we talked about it last week. We had that kind of short-term consolidation. We did pop our heads up higher, looking to see if there's any sort of reaction on the rebalancing in this region around 106, and of course we did try and break lower. Since then, really, since the beginning of this week, and of course since from the tail end of last week, from last Wednesday, Thursday, markets have very much kind of accumulated, gone sideways, and of course that has meant that the US indices have been very, very back and forth and choppy. Now, these types of moves do tend to occur at the end of a trend phase and kind of at the beginning of the next phase where accumulation would tend to come into the market. So that's quite an interesting one to see. How does this obviously play out? If there's any sort of median reaction off of this 106 level, and of course, do we get that shift in sentiment, or is the market's going to hold that risk orientation, that risk aggression, and continue kind of chugging higher? And I suppose the next couple of days will be a key determinating factor in that, broadly speaking. So if we move to the FX markets just very, very quickly, euro dollar has just continued to chug higher as well. So we've come back into this daily area here, this kind of 103.50 to 104.50 level. We're still creating bullish order flow notably. So I suppose structurally speaking, if we're looking at price action, we're looking at movements, we're still kind of creating higher highs, higher lows. We've got higher high, higher low, higher high, higher low as well on the daily time frame. If you go down to the 4-hour chart, we're still kind of trying to create bullish order flow. We're only really looking at this being broken if the structure of the trend is broken, and that really is this kind of last low per se down here at this kind of 102.50 level. Now, of course, multiple reactions from this daily zone, this daily liquidity zone over here, is obviously quite important as well, because the price action is struggling to really propel itself through it. So it's becoming a little bit more flagging in structure, but not kind of to the degree where you're going to get that very, very elevated sharp break. It's kind of more accumulating again, kind of like with that DXY at that 105.50, 106 level as well. So worth keeping an eye on this. You've got short-term structure here as well. And you can actually see here on the 1-hour charts that accumulation back up into this zone, false break to the upside, trying to break above 105. Very, very clear rejection yesterday, and back into the lows, and today the markets are accumulating again. So I suppose now it'll be interesting to see, can the markets break the short-term low, and then structurally speaking, then does it go on to try and take new lows again? And that's really kind of looking for a pickup in dollar sentiment and a clear directional bias at the minute, because at this moment in time we're very labored, very back and forth, and very, very choppy. And if we look to the cable as well, we're seeing kind of similar noticeable moves. So I suppose structurally speaking, the cable obviously did break above this daily liquidity level. So this zone of interest where we've got these kind of daily candles, price action did obviously sell off very, very drastically, has flagged beautifully back up into this 120.50 level. So from a discounted price point, you're kind of getting that. Of course, we did have the false break above this daily area of liquidity, and price action has broke back down. So of course, if the price action isn't closing back above this 120.50 level today, we've broken through, we've come back underneath, we've come back up to retest and rejecting. So this could very easily start to tilt lower again, off the back of this kind of short-term price action structure, the fact that it's not controlling and gaining itself back above this 120.50 level. And that's really going to be the big thing today over the next, let's say, day or so, to see, does the price action create this bullish order flow again? Higher high, higher low, higher high, higher low. And can we continue churning higher to the upside? Now, moving across to JPY. JPY is just continuing to kind of sell off. It's been interesting because we had this obviously short-term consolidation. We had proposed the idea of could we get that kind of short-term recovery back up into this 145 level, but so far no is the answer to that, because obviously we've seen higher highs, higher lows in the trend. very, very clear bullish trend, and tangibly speaking, we've come back down to this consolidation zone of which the price action now is trying to take this lower. So of course that's going to be a key element of interest to see. Well, if we're getting a clear break of this area of interest here that we've kind of talked about, the price action can very easily continue sliding all the way back up into this zone down here at 134.50, 134.60, and that would be kind of the benchmark to pay close attention to, because of course we've had that massive impulse to the upside, that massive bullish trend, broadly speaking. We were seeing that very, very sharp unwind of that bullish trend. Now, of course, here you would have liked to see the price action get a little bit higher, get back into this zone, and then initiate further selling. But of course, that hasn't happened, and the market, as we speak, is still just a bit hanging on to 138, but looks like it could very easily turn lower back to this 135 level, which is obviously worth keeping a very, very close eye on, broadly speaking. So last but not least in the FX pairs is the Aussie movements. So the Aussie is still churning higher broadly. Daily trend, obviously massive sell-offs, that these kind of phases in correctional price action, so consolidation, manipulation, taking of highs, all the way sell-off, creating bearish order flow, so lower lows, equal highs, new lower lows again, another lower high, and then the market just has continued to try and lower all the way back to the 62.50 level. Now, as I said, over the last week or so, with the stronger indices through November, that has kept the Aussie bid to the upside, and that's obviously important to note, broadly speaking, where the price action has come back into this kind of 67, 68 level and been very, very consolidationary in this region, because of course the DXY is slowed down. We're not getting a clear directional bias in the DXY. We're not getting a clear directional in the indices at this moment in time, because the markets are now starting to accumulate volume and starting to move sideways laterally. And of course, that is very, very clear, particularly when you look at the 4-hour charts. We're getting lower highs. We're also getting higher lows here and here. So structurally speaking, price action is very much curtailed in this, I suppose, consolidation area. If you draw it out very, very quickly, you can kind of see that there at the moment, very much kind of curtailed up and down within this consolidation zone. So you're looking for now a clear break on a directional bias, really, to see, does the price action continue legging higher, taking out this 68 handle and obviously pushing on to this area up here around 69. So you've got an area up here at 68.75 from a 4-hour order block liquidity perspective. So this is obviously an area that we'd be looking to see. Well, obviously, if we're going to try and break out, we should be looking for the price action to come back up into this region and mitigate that level. So that would be something to watch out over the next, obviously, few days to see what sort of reaction develops in this zone of interest. Gold is quite interesting, structurally speaking. So if we go from the higher time frame perspective, I suppose structurally what we are kind of seeing is obviously the failed daily mitigation here at 1790. We are getting higher highs. We did get a pullback on the daily. The price action now is trying to push through this 1760 level. So short-term perspective is obviously top. We've got that correctional move back to 1730s. But we've been very, very kind of, again, back and forth between 1740 and 1760. And if you look at the 4-hour chart as well, you can also see actually that we've got the higher highs. Generally speaking, flagging structure, higher highs, higher lows, higher highs, higher lows, mitigate the area, and then start to see that break of structure. So at this moment in time, we've got the first higher high, we're pulling back. Could we now see the price action try and take this out and try and push it up into this level like so, and then try and create that type of structure? Wouldn't be impossible, but it's really now just a case of how does the price action react today around this 1760 level, to see if there's any sort of elevated move, see if there's any sort of upside provision and price action, and of course a clear sentiment. So above all else, regardless whether we get a sell-off or an increase, we're looking for clear directional bias, because at this moment in time it's very, very choppy, and you really then have to go down to the shorter term movements and price action and see here, well, we've also got contrarian viewpoint, because we've got consolidation here, we've got a rise up, we've got the price action coming back down into this level here, which is just almost mitigated. So you can kind of see that there, this has been mitigated. And then you've also got this contrarian viewpoint where you've got this consolidation, this false impulse, this short-term break of structure, this low, and the flag back up into this area here. So you're kind of getting a double whammy on both elements. And that's really just indecision in the markets. And I think it's really, really important to be aware of that. And if that means you need to go up to a higher time frame to get clarity within your trading plan, well, then do it, because I suppose it's all about watching either the short-term perspective, but trying to avoid the influxes of volatility through news and fundamental data, or looking at the higher time frames and mitigating against all of this short-term chop and volatility as well. Now, moving across to the oil markets, we can see how oil did temporarily yesterday break through these this low here. So this is obviously the September lows. We've got the wick rejection, then we ground low over the last few days, tail end of last week, Wednesday, Thursday, Friday, retested these lows. Of course, did actually break out that massive rejection yesterday, closes back below, or sorry, closes back above with this massive wick rejection to the downside. And we're now seeing the price action try and create this three candle formation, that rejection, that sell-off, kind of halting of selling bias, and of course, that relief rally accordingly. And as well, you only have to look at that. This low here around 76, of course, is where the price action sat at the beginning of the year. So, of course, you only have to look at the 3rd of January. The first close on the 3rd of January was, of course, at around about 75.88. And that is where the price action has been holding very, very clearly over the last couple of days or so. So also then when you look at the price action, you can see how we've obviously broken structured lows. So we've got the daily order block, the bearish trend, very, very clear. Daily order block rejected. We talked about last week. Daily order block rejected again. Massive sell-off. We've broken the lows. So you're still seeing obviously bearish order flow. So from an oil perspective, we've got consolidation. We've got that very, very sharp bearish impulse. We're now flagging structures. We're creating that lower low, lower high, lower low scenario. So now it's the case of, can the price action start to break the bearish trend? So normally speaking, when you get structure like this, where you have lower lows, lower highs, lower lows, you're really looking for a very, very sharp snapback, taking out this bearish order flow. And we've yet to see that because the price action is coming back up, but now you can see how the price action is now halting at the local area, the local top, rather than trying to progress through it, take out the highs and start to reiterate change in trend. So unless you see that type of structure, really just be fearful of the fact that this could very easily reject and we could still continue to see more bearish order flow. So it's important to be kind of conscious of that. Given we broke through and obviously impulsing sellers yesterday, we obviously got that very, very quick flag back all the way up into this region. And of course, since then, the markets is taking out this impulse here rather than just simply retesting the low and continue to sell off. Now, on oil on 1 hour charts, you can also see as well, if you're looking at the 1 hour liquidity, obviously new lower lows, lower highs, new lower lows, lower highs, lower lows. But we also have this short-term area here of interest. And of course, if you're looking at the 1 hour chart, we've literally rejected it to the T. So this 79.60 is held up very, very nicely. The markets is now flagging, short-term flagging structure. So it's really just a case of to see, does this order flow here at 78 give way? Because if it does, this could be the mitigation of this sell-off for the price action to potentially run lower. And it's just being important to be aware of the different biases and nuances within the market, broadly speaking. Next on the list then is the S&Ps. So S&Ps, structurally speaking, is continuing to obviously move higher. So we're still getting that daily order block liquidity zone between 4065, 4100, which is yet to be mitigated. We are still getting that short-term flagging structure. Okay, so that's obviously something to keep an eye on. Higher highs, higher lows, higher highs, back into this higher low. And just structurally speaking, it's just important to factor into consideration that if we move the fibs for a second, you can actually see how this 4 hour liquidity area here at 39.55 held up overnight. So this really is kind of the bottom for the S&P at this moment, between 55 and 70, to see, are we going to continue creating the daily order flow of higher high, higher low, higher high, and seeing this churn up, flag up into this daily zone, or of course seeing if the invalidator is breaking through and obviously propelling to the downside. So if you're looking at sells, you're really looking to see, can this level be broken, to see that alteration in the trend and obviously change in sentiment. And that's very much the same across the board, both from the Nasdaq, from the Dow Jones, and also in Europe. So Nasdaq is topping out here. You can see it on the daily perspective, obviously topping out here at 12,000. We had that initial impulse rejection at 12,000. We had that pullback. Obviously, the last few days, markets are still accumulating. You can see that with the DXY accumulation and some of the accumulation on the other assets we talked about. You can see how the Nasdaq is also accumulating. So we had that daily accumulation. We also have that peak where price actions broken out to the upside. We're still now creating that consolidated structure. So we need to see, obviously, if you're looking for buyers, you really want to be seeing this 11.9 being broken through. Otherwise, there's a very easily potential that if the indices change direction and the dollar starts picking up sentiment, this low down here at 11.5 could be broken, and we could see a very, very clear snapback all the way down to this region down here around 10,850, 10,900. US 30 price action speaking from this perspective, obviously very, very clear perspective in terms of the order flow comes back up. We're getting that flagging price action structure all the way back up into this liquidity zone. Notice again how 34,300 we had got a strong closure above it on Friday. We gapped down on Monday, and the markets are holding fairly underneath now at this moment in time. So now it's all about it's all about assessing and evaluating price action from that perspective, because you can see here markets are consolidating, and you can see how the order flow is still trying to chug higher. But from a short-term perspective, we are coming back out to try and clear out this imbalance. So all of this buy-side imbalance, the price action is trying to take that out. So we are creating that bullish order flow with bearish correction. So higher high, higher low. The short-term higher highs, another higher low. Higher highs into a consolidation with a continuated break back into the daily price action highs, which of course had been taken out on Friday with that marginal close to the upside. So of course you can even see here on the 4-hour structure, we've closed higher, we've come back down, we've managed to just about close the gap. You can kind of see it there yesterday morning, should I say. And of course, very, very sharp sell-off overnight. So it'll be worth keeping an eye on that to see kind of what the reaction is in the markets. Do we see that continued sell-off? If so, we could very easily see the indices flag back, particularly Dow Jones, flag back into this region here. Now, of course, because the bullish trend is still intact, bullish order flow is still the order of day with bearish correctional movements. And that's really a case of how does the markets react in this region down here to see if there's any sort of reaction per se, or if it's just a case of, well, this is just an impulse to take the markets higher. We come down, we break through the structure, and then, of course, then there's a change in sentiment, because, of course, this is the false move. This is the break of structure, looking for that liquidity move, which then, therefore, invalidates the fibs, and then looking to see if there's a bearish correctional movement accordingly beyond that. So last but not least is obviously the UK FTSE100, of which is still churning higher consecutively. So we're seeing that order flow to the upside, still kind of grinding itself higher. Now, of course, the last 4 or 5 days has been incredibly choppy, like it was down here at this daily liquidity level. And of course, the daily candle today has broken out through. So if we're getting that daily rejection today, let's say, for example, back underneath 7,500, that's a clear telltale sign we're starting to see a slowdown, because yesterday, if you look at the shorter provisions from last week into the early parts of this week, very much kind of holding steady around this highlighted region. And of course, we get that hunt of liquidity. This is the stop hunt that we're talking about. This is the manipulation, being able to identify the manipulation, waiting for that to happen, waiting for the markets to take out all of that excess liquidity, and then joining as the selling fund comes into play. Now, from that perspective, even on the 1-hour chart, you can even see it here. Structurally speaking, we have that higher time frame level, but you've also got this liquidity area here. So we've very much been kind of holding these two levels, and of course we've stopped onto the lows, we've then flagged higher, we've stopped onto the highs. So now we're looking to see kind of what the reaction is as the price action comes back into this 7,500 level. And does it hold above 75? Does it break back underneath, or does it merely hold above it and then try and churn or continue progressing higher? And that's really going to be the next phase of price action here. Given that we've got the hunt of the lows and obviously the hunt of the highs, you would like to see the price action coming back in, but of course looking at the higher time frame perspective as well to give you a little bit more clarity. Otherwise, you're not potentially going to be on the right side of this, because you could very much see the price action churn lower and regress, because we've obviously rejected this higher time frame area of interest here at 7,500. So last but not least is the DAX. So the DAX structurally, from my perspective, is this 4-hour daily zone of interest here, with the yellow line between 14,550 to 14,580. 600 has been very, very interesting, because we've got that flagging structure, right? Structurally speaking, we've higher highs, higher lows, higher highs. We've mitigated the 4-hour daily zone. The daily zone is the bottom of the yellow region. The 4-hour is obviously the top, where we've got that rejection on Friday. We're selling off, so we're trying to break through this structure now. So if we're getting this break of structure, now it becomes a case of how far does this sell-off come to? It's obviously trying to take out this low, but could we potentially see a deeper runoff back into this level down here and wait for the order block liquidity pullback? That could absolutely be a scenario. So now it's just a case of waiting to see where this impulse actually ends for that correction back into liquidity order block zone of interest, to see then does that sell-off then start to appear on the downside as well. So obviously a very, very nice move there on the DAX on Friday. Do you want to be selling the DAX on Friday into Thanksgiving with the volume close, of course, early markets and the lull? Obviously Europe was open, but obviously US markets are closed, which means you're only kind of looking at it from one perspective, which is maybe not a great thing to do. So obviously very, very interesting markets in the first few days. All eyes really on the price action in terms of structure and in terms of setting the tone for the next couple of days. And of course, tomorrow we will be back tomorrow evening to reevaluate the price action after today's initial impulses, and of course after a lot of the data has surpassed tomorrow and passed the SPY as well. So have a great week, everyone. Trade safe and take care.